All right, we're back. And it is a nice Sunday today. Happy Sunday. I'm feeling a little slow today, so that might mean this goes a little slower, but hopefully I can just kind of do a quick update on my positions, kind of where I'm at, what I'm going to be doing or looking at this week. We've had some more progress, obviously more profits in some of the positions, and kind of update you on where I'm at with some of the automations. If you don't know who I am Ben Collins. I'm CFA charter holder. I'm the Chief Investment Officer of Options Autopilot, which is an automated options trading platform. If you want more info on that, just look in the description and you can find it there. So let's dive in right away to my TastyTrade, and we can kind of get an update on the positions here, kind of the major ones, the manual kind of long ones, some of the ones that we've been talking about recently in general, because those have finally started to work. But yeah, we can kind of see as we're looking at it, if I go to activity, they just changed all these things. But year to date, currently year to date gain $31,373. After fees, obviously, that takes a big chunk. 29,488. A lot of that coming from some of our long call leaps, and just how I've kind of structured that, but a decent amount coming from actual automated trades. You can see that, crude oil futures were actually, I think, up a little bit. I've just, let it run. ES up quite a bit. I think we're up $6,600, 66.73, I guess, on ES alone. That's fully automated. I think that ends up being $700 roughly a month on average, and that's again through the tariff drawdown, all that stuff. I just let it go. So that's been running. You can obviously set that up on Options Autopilot. We got that all on the website. But anyways, just wanted to talk about my thoughts here, how I've kind of changed my positioning a little bit. So Intel, if you recall, was kind of the more recent big winner. It popped on the news of NVDA kind of making an investment, and then it was kind of rallying again when there were supposed talks, or they were approaching Apple, and then I think it was Taiwan Semi about potentially doing some type of partnership or deal. I'm not sure how helpful this really is. It's probably helpful from a optic standpoint, and I guess getting good investments, kind of aligning things. I think in general, though, it's tough because this becomes kind of then a political stock to a certain degree, because the U.S. is involved, and then Trump's tweeting about the CEOs and all that type of stuff. I don't know if that's necessarily positive, but all I can think of is, in general, they're going to want to show that they made good investments. So I'm assuming they're going to try and make things happen. Again, I don't want to say that saying it's okay for the government to be doing these things. It's just more of, like I said before, you got to trade the market that you have, not the one you want. And so I would hope this is on fundamentals of the company, but I think right now it's kind of on speculation. Personally, what I think is going to happen, this is again total guess, I think Apple and Taiwan Semi, might come out and say they're not going to do anything with Intel. I can only imagine maybe the benefit is that they're trying to onshore production, and maybe they're somehow going to utilize Intel's infrastructure. I don't know. Maybe that's totally off base, but that could be positive news to keep this going. But in general, obviously you got this gap up, then it sold off, now it's rallied again, and they're kind of breaking back. I think it's kind of gotten to maybe a point of not exhaustion, because you've still got some high volume here. My hope would be that maybe it pulls back a little bit, and then I would be selling some puts on Intel, some cash secured puts. But you can see that I was long, like just long calls. That's it. Previously, I scaled out of those, and now I have started to leg back into a call spread. So as you maybe recall, if you've watched, and if you haven't, definitely subscribe, because I'm kind of going over this as I'm going. And again, this is just my own personal opinion. Don't follow what I'm doing. This is my own money. but I'm just trying to tell you my thought process. So hopefully it's educational for people. So ultimately, we've gotten a pretty big move in Intel, and now, I think I was up $7,500 roughly after that gap up originally. Now I'm up 10,677. So now what I'm starting to do is take this kind of profit and put it into a call spread, and the logic there, like I've kind of previously described, is at a certain point, the options are pricing in quite a big move, right? So, it's nice to have just long calls, as it starts to move in your favor. But then at a certain point, it's like, well, I've doubled my money, or maybe I've gotten 150%, 200% return. How likely is that to go forward? If you look at kind of this going out 2.5 years or 845 days, basically. Right now we're at 35, and now this is like almost a $12 option. Sure, you have a lot of time, so your break even is roughly $50, $49. So, do I think it's going to get to 50? Definitely possible, but to earn a double or even a triple over that time period, it would basically have to get to 60, 70, 80. Is that possible? Yes. And obviously, if you want to just let it go, just do that. And that should be a better return, obviously, than just holding the stock if it does get to there, and you're holding these. But it gets harder to do. So what I'm kind of doing is taking some of the profits I've already gotten, and then I will be doing a call spread, right? Because I'm basically making a bet now that I think it can go from 42 to 47, right? So it's a much smaller move to get to 47, and basically I will earn about 2.5 to 3 times my money with this spread, versus it going from 37 to $60, right? So that is kind of my thought process. So in a way to kind of multiply my capital, hopefully, again, and just kind of let it sit, because I do tend to be probably too active on some of these things in general. But that's kind of my thought process. I will add to this if I get up. Currently, I'm not up on the spread itself. You can see I'm down $100. Again, this is the thought process of I'm not typically adding to long options when I'm down. In this instance, I might leg in a little bit. I did that on SOFI, but so far that hasn't worked. And just to touch on SOFI, it's pretty much the exact same story. I've added more of a call spread, larger call spread position here, and I've been selling puts as it's been pulling back. Not quite more recently. I wish I would have waited a little bit, but same kind of concept, and I'll do that same thing again with Intel. And then the last remaining kind of bigger long position is RIVN. Again, I tried to look and see how many reservations they have in the current R2, which I think is going to be I'm kind of likening it to a Tesla Model 3. It's their lower priced, vehicle coming out. It is a smaller, like a mid-size SUV, I think. I think that'll be very popular. I think it looks good. I think they've got good designs, and their customers like them. Remains to be seen if that's going to follow through on the stock and actually propel the company up, because I would say they don't necessarily have all the other kind of benefits that Tesla does from the technology standpoint they're working on. Let me actually pull up RIVN here. I was still on SOFI, but you can kind of see it started to pop above a resistance level that I had drawn there. I'd say $17 is kind of a big line as well. But they IPO'd at a very good time, 2021, and unfortunately, if people got in that IPO, they kind of got crushed. But my thought is, it seems like it's basically formed a pretty long-term bottom. It's now finally breaking above this, and I do think the fundamentals are going to be shifting on the stock in terms of good news coming out with R2 sales. I think last I saw, let's try this real time and see. I think how many reservations do they have for the RIVN R2? So, this is only saying July 2024 over 200,000. I think I saw somewhere it was like maybe, yeah, 300. So I think that that's potentially positive. I haven't totally looked at the Tesla stock move versus, when they finally actually made first production of the Model 3. Because maybe that'll give us, again, insights. Doesn't mean that the stock's going to do the exact same thing, but that's kind of my thought process. I'm thinking there's going to be more positive news flow on the stock, and I'm wanting a little bit more of a pop here. I'm not going to add to this position, even though I'm up a little bit. I already kind of did my add originally, so I'm at 14 contracts here, and I'm not going to add until I get up maybe another $1,500 would be my kind of time frame there. If it gets above 17 and it's pretty convincing, then I would probably add a little bit more, and depending on where I'm at that point, scale into something a little bit different, maybe a call spread. So stay tuned. I'll keep you updated on that. In general, on all the other automations, they're just humming along. I am leaning short here. This is because I added in some kind of call sides of the 111. It hasn't necessarily been too helpful, but it's because I'm leaning so long with my leaps that I have decided to kind of lean a little bit short on my ES. So I still have 2 of the 111 on the put sides open, and then I have 2 of the calls, and it's ultimately just kind of I'm leaning short, which hurts when the market is rallying, but it is kind of helpful as it's been pulling back a little bit. So we'll see what happens. I'm just gonna let the put sides come off as they would automated, and if this kind of gets down to a level where it's almost neutral or then kind of leaning long, I might pull off the call side, because I'm gonna assume that's probably kind of an extreme move at that point. So you can see the whole total portfolio is pulling in about $233 of theta, which is pretty insane and obviously a benefit. If you can basically get to $400 a day in theta, obviously you're very short Vega. You always got to be aware of this, because if you get a VIX spike, this is not necessarily going to help that much. It helps a little bit, but if you got to $400 a day, you're basically at a $100,000 salary, just from having options decay in your favor. So that's another benefit. Again, nothing else to really update from that standpoint. Crude oil is just one of the 111s. That was just a standard one that went on. Same thing with the 30-year bonds. Both of them. Well, I guess the bond 111 is still down. Crude oil slightly positive. It looks like, yeah. But they're just humming along. Not really messing with them. Not touching them. Same thing with Bitcoin. And then the other big update is obviously I switched to doing much higher frequency MES instead of ES. So again, similar to, I guess, taking my profits and then re-levering them up with a call spread, I'm kind of taking these profits and then trying to do much higher frequency, and a little bit, not larger dollar amounts, but like higher frequency with as much money as I would have been risking on ES, right? So as these ES ones roll off, these will be ramping up, right? You can see that I'm really barely long, right? Because MES is so much smaller. I only have one there, but we can see that I have a lot more on this contract. So I'm basically doing one every day of the week at a different days to expiration. If we show you on options autopilot here, this is our dashboard. You can basically see that I have 30 days. This is going every single day just because I'm doing an experiment there. That's kind of, in my opinion, replacing zero DTE, because eventually if they're rolling off every day, that's effectively acting like zero DTE, and you should hopefully be getting a little bit better premium and a little bit better structure, in my opinion. But obviously you can see I'm doing 90, 75, 60, and 45 days for MES. And that's, basically one of those is going off one day of the week. So it's, this one might be on Monday, this one's Tuesday, Wednesday, Thursday. Um, and so that's how I have it set up currently. And what my plan is because I'm up a decent amount this year, I'm kind of gonna take that and probably just, it's almost like taking your gains and moving it into fixed income, in my opinion, by using that fully with automation. So if I took $30,000 and on MES, again, there's no guarantee of this. I'd say in general, what I have observed, it's been 2 to 5% a month on the account. Individual trades, the return on your margin is approximately 10%. I mean, if I really wanted to go stupid, I could be trying to get $3,000 a month on that $30,000. I don't think I'm going to do that. I might shoot for $1,500 a month on 30,000, which I still think is a very good return. And because I'm doing it on smaller dollar amounts for MES and more frequently, if we get a pullback, it should just be averaging it out a lot better, even if we get a drawdown. And I did want to touch on overall market valuation. Not that with automation you don't necessarily need to be totally concerned about this, but I would say that at a certain point you kind of got to pay attention to some of these things, because algorithms pay attention to it, money managers pay attention to it, and it can help at least be aware of these things in terms of the S&P is pretty high from I think it's a Cape Shiller PE ratio. I think it's the third highest on record. The other two being the .com era and I believe COVID time frame. So it's now at I think like a 39 something times. So I'd have to look it up again. But I was just going through this. If anyone wants to check this, yeah. 41.1 at the end at February 2025. So again, we can see that the market's gone up even since then. So it's not totally predictable or predicting near term kind of moves. But if anyone's curious, I'll leave a link in the description for this. It's a good read if you really want to dive into some of the fundamentals. Not that you need to. I mean, forward PE is another one to look at. We can kind of see, again, it's just good to kind of have a context of where we are in terms of extremes. I would say that, it's getting closer to where we were in 2022, end of 21, and then we had that pullback. Obviously, we had this a little bit earlier in the year, had the pullback. That was kind of self-inflicted tariff. So we're kind of getting back to those levels where it's a little bit extended. Same thing here. Obviously, it's a little bit higher, but we can kind of see it can get up here. So there's more room to run, but it's just good to be aware of this. Again, just to go over, let's see, credit spreads. If we pull this up, this is obviously probably getting compressed as well. And when high yield credit spreads are very tight, I mean, usually you can see that it does mean that people are feeling pretty comfortable. So there's no reason to think that will change necessarily, but you can kind of see how things could pop, and you're not necessarily getting a ton of compensation right here. If we do start to have a softening in the labor market, it could make spreads widen out on high yield, which again, if you get to certain spreads on high yield, they become very good opportunities to buy. So just keep it in mind. Things are pretty highly valued. I think there's the Warren Buffett indicator, they call it, and it's basically, I think, earnings to GDP. And I think we're like 200 something percent, and on average it's like 85. Again, I'm just like roughly paraphrasing. It doesn't mean the market is going to crash imminently or anything like that. It doesn't pay to bet on crashes really, but ultimately just you want to have a plan. That's obviously where I'm using automation, and our users are using automation to be helpful, because ultimately if it does kind of pull back, just like we did have it through the tariffs, which I think was pretty extreme. Anybody who just left the automations on is back up. So it's more of the fact that you're always like kind of selling under the market as it's going down. And that's why it can perform in the long term, as long as you let it go, because we are harvesting that risk premium for equities. So that is pretty much the update. Obviously, feel free to ask me questions. If you want any more information, like I said, check out the description for Options Autopilot. We have a great system, in my opinion, and it's still fun to just see automated trades go off. And stay tuned. I'm going to probably add some other positions that I'm looking at in the future, and in addition to other automations that we're kind of working on releasing. So appreciate everybody. Have a good Sunday, and we'll talk soon.